Kevin Hincks, live at the CBOE with the pre-bell playbook, and a good morning to you, friend. Let's talk about jobless claims.
Good morning, Nicole. Yeah, we got jobless claims about a half hour ago. 199,000 first-time filers for unemployment insurance, a strong number. Now, the skeptic in me, as I told Tom White earlier, says there may be a holiday factor going on here with jobless claims. And I think a lot of people who follow the markets and trade the markets hope for in 2026 that we'll get a more stable data environment, right? That these numbers will start to smooth out and we'll actually get real-time data, right? Normally, Friday, we might expect a payrolls number. Well, we're not getting that. Hopefully, we'll get it next week in a timely manner. But 199,000 first-time filers for unemployment insurance, a historically strong number for jobless claims, Nicole.
All right. Well, I mean, I do always think the holidays do have something to do with it. So we'll have to I can't wait to finally get data real time. And how about what's going on with the Federal Open Market Committee? We got the minutes yesterday. Your thoughts?
Yeah, remember, you and I spoke yesterday, right when the Fed minutes came out, and it was, from December 10th, so it's 20 days old. So a lot of the data we knew about, remember, there was so much released in that Fed meeting on December 10th. But this one, and I thought, and you and I spoke about this yesterday, what I thought was the most important part of this was what led them to not only stop quantitative tightening on December 1st, but start quantitative easing. And in the Fed minutes, here's the statement. In light of this projected decline in reserves, as well as recent developments in money markets, the manager recommended that committee consider starting reserve management purchases this month to maintain ample level of reserves on an ongoing basis. So it's not necessarily quantitative easing, but they are buying short-term treasuries to make sure that they're well positioned for next year. So besides that, remember, we talked about things like the dissenters and the rate cut and the SEP and the overall a big distance between the members of the Fed that are focused on the labor market and the members of the Fed that are focused on inflation. A very polarizing look at how the FOMC is moving. And remember, what January 1st does, it takes out some voters and it puts in some new voters. One of them is Beth Hammack, who's very hawkish on interest rates and thinks they should remain at restrictive levels. So I think the minutes didn't give us anything really that we didn't know, just a little more depth into what they were discussing, Nicole.
And it seemed that, and I think you make a great point about, just all the discrepancies, some for, some against, but and all the discussions. But it does seem that they are open in the longer term to a cut if needed. I mean, it's not that they're anti-cutting. They just want to wait and see. It's the timing more on the story there. When we look ahead to 2026, we got a lot of housing data. There are some bright spots that people are hoping for in 2026. AI continuing to move forward, energy, for example. As you look ahead to 2026, any thoughts here?
Yeah, you touched on one of the key topics coming up for 2026, and that is housing. We're coming off now a third straight year of sluggish markets. Remember, in 2022, interest rates went from around 3% to 8%. And that affected mortgages, that affected housing, that affected so many parts. Remember, the inputs. When inflation was hitting the markets, it's not only prices of homes, but prices of the inputs to build a home that skyrocketed. So I think the Trump administration's really going to focus on affordability in 2026. And I think a lot of that focus is going to be in housing. So I'm going to watch for overall mortgage rates. As you know, the overall housing market is very sensitive to mortgage rates. So I think they're going to work on the supply of housing, and they're going to work on lower interest rates to make that payment, that thing you look at every month and pay, as low as possible, Nicole. And I think that's one of the things we're going to talk about a lot in 2026.
Look at that. The S&P up 17%, NASDAQ up 21%, the Dow Jones Industrial Average 14%. And the Russell small caps double digits too, right? Up 12%. And this market had everything thrown at it. I got a great piece with Peter Tuchman. We put it on social media. He just said he went through the year and what an incredible, wild year it was. And the market was so resilient. And that was really his point, that this market just powered forward. All right, Kevin Hincks, great to see you. Thank you.